Hi there, everybody. This is Craig at Max Trading, along with Chris and Eusebio, and it is a pleasure to welcome you to our live trading session today in connection with the NFP. Thanks so much for being here right on time, and we're looking forward, hoping that today's U.S. jobs news will provide some nice price action. If the report will just give us a nice little surprise, then we should be in good shape to see some trades. Of course, we never know. Nobody knows what the market will do. So like everybody else, we wait and see. We hope for an opportunity to show you how max trading methods take advantage of movement in the markets, and even more importantly, how our risk management protects the account balance as we trade. And will you please remember that this is not a trading room. We are not providing trade calls. Nothing you see or hear in this webinar is to be taken as entry or exit advice or recommendations. Everything that you see, everything that you hear, it is for educational purposes only. Eusebio is here to lead us into the charts for this NFP session. For those of you who may not have met Eusebio, you will very soon discover that he is a highly skilled trader. You will sense that he truly enjoys helping his fellow traders. So I hope you will listen and watch carefully. You'll learn a lot during this session. And please feel free to ask any question that you like in the question panel on your GoToWebinar window. The methods that you will see today are taught in the Max training courses, which are available anytime by video and regularly on a live webinar basis as well. We provide very nice discounts for those who take time to attend our webinars, so I'll post those links for you during our session today. That's our thank you for participating, and we are glad that you're here. Eusebio, I think that's all the preliminaries today. Thank you for sharing your time with us, and I'll turn the microphone over to you and let you get us started.
Okay, thank you very much, Craig. So hello everyone, I hope you are doing fine. Before starting, let's make a quick audio and video check. Do you see my screen and do you hear me well? If you would like to type a yes or Y either in the GoToWebinar question areas or for the Max graduate in the chat C area. Okay, a lot of yes. Okay, thank you very much. Yeah, Tony, this is recorded. All the sessions we have are always recorded and made available. Okay. Well, so what are we waiting for the coming minutes? So let me show you my browser here. So we are waiting for the non-farm payroll. Okay, in now around 10 minutes. And the bias for the US dollar based on the non-farm payroll is negative. But the market sentiment for the US dollar is positive and negative for the pound. For the pound, it's understandable with all the events happening in UK, bad sentiment, economical data which are not as good as expected, a catastrophic speech by the Prime Minister May yesterday, and some difficulties in the Brexit negotiations. So the pound is dropping, but perhaps it is now at a level to be bought. Perhaps, we never know. So we have to see what the market will give us. But the main event is the non-farm payroll. And so the non-farm payroll, when we have a big surprise, always move the market. The difficulty of the non-farm payroll is it is combined at the same time with the unemployment rate. And so a good number for the non-farm payroll should be a number larger than the forecast. A bad number is a number smaller than the forecast, but with a difference large enough. A few percent is not enough to make a big surprise. A big surprise requires a difference of 20, 30, 40,000 or more compared to the forecast, positive or negative. And for the unemployment rate, it's the contrary. a better number will be a small number, and so this is a good number, and a worse number, a bad number, will be a larger number. And for the market to move, we have to see the two news in agreement. This means if we have a bad surprise for the non-farm payroll, we should see also a bad surprise for the unemployment rate, and vice versa. If we have a good surprise for the non-farm payroll, we should see a good surprise for the unemployment rate. In this case, we will have a movement either strengthening or weakening the US dollar. And this will give us a lot of opportunities in many pairs. If the two numbers do not provide us with a big surprise, or if they are not in agreement, then the market becomes more difficult to consider. It becomes unpredictable, and so we have simply to follow what the market is doing. Okay, and so we have just to wait now around 9 minutes, 8 minutes in order to have these numbers. You can see that there are many other news during the day as well as during the other days, and so on the calendar you can display one day or 1 week, and so you can follow these economical news day after day, but not all the news are important, and the color code we have here in Forex Factory is not always correct. It's not because a news is in red that it may have necessarily a big impact, and on the contrary, it's when we have news in orange or even in yellow, it may possibly have an impact in the market depending on a big surprise or not. And so to make easier for the traders to follow these news and to consider only those which are important, we publish every week on our website here in www.maxtradingsystems.com/newswatch. We publish week after week the list of the news which are really important, and they are less news, of course. And so we have the news for Monday, we have the news for Tuesday, Wednesday, Thursday, and of course today, Friday. We have for Friday today only two news. The main news is on the US dollar with the non-farm payroll and the other relative news release, and similarly for Canada. And earlier today we have had a rather good number for the pound with the Halifax housing price index month over month. But the market is waiting for the US dollar non-farm payroll. Once the news would be released, we have to pay attention for minimum 2 minutes, because 2 minutes later, and this is not always indicated in all the economical calendars, we have the revision for the previous months, and this may also change the sentiment in the market. And so we have just to wait, and so my plan is to consider potential trades depending if we have a big surprise or positive or negative in both the non-farm payroll and the unemployment rate. In such a case, we can consider, at least with the max to trade, the sustainable movement we should see. I say should see because sometimes, even if the numbers are clear, the market does not follow the numbers. It depends how the market has previously anticipated the news, and it depends on other possible events around the world which may be considered as much more important. In the case we don't have the two numbers in agreement, so we will simply follow what we see on our charts. And so I'm using a simplified version of the max here, but it will be enough to illustrate the process we use and to illustrate how we try to manage the risk whenever we have a potential trade. So 5 minutes before the news release. So if you have any questions, please feel free to post them in the GoToWebinar question area, or for those of you who are Max graduates, in the chat room, in the usual Chatsi room, because I watch both, and from time to time I will watch if there are questions. So Okay, it seems that now everyone is hearing my voice and seeing my charts. And so the sentiment of the market I have pinpointed is negative for the pound, positive for the US dollar, and so few elements to consider. And so we can consider pair like the pound US dollar, of course, which will be the main pair, but also as an alternative the pound yen. And the pound and the euro are often correlated, so I like also to follow the euro US dollar and the euro yen. And from time to time I add other pairs. Of course I will consider the USD yen and another pound pairs, which can move a lot also, the pound Aussie, because we have had also a news on the Aussie, I think, earlier during the ASEAN session, and a negative sentiment on the Australian dollar. And so this gives a good choice of pairs to monitor, and then when we may have some movement to consider what to do with these pairs. If we observe, for example, the pound US dollar, we can see that for the moment the market is retracing to the downside with the US dollar strengthening, and we see that the directional bias is to the upside, but it can reverse. It can reverse. So when I see that such kind of retracement compared to that up movement, it may possibly reverse. And on the pound yen, we have approximately the same behavior. So I don't try to guess what may happen. I simply wait for the numbers, and then I will watch what the market will do. We have plenty of time. If we have a big surprise, for example, we will see a high volatility in all the pairs, and so we will have to wait for the volatility to settle down before considering something interesting. So let's switch on the calendar now, and let's update the calendar because we should see the small green button now. I hope we will have access to the calendar because it's a news which is followed by many traders. So it seems that the site is very busy. Okay, we will have the page. I'm going to reduce the size of my browser to still have a look on the chart that way. We don't need to watch the other information. So 1 minute. And so the main point up to now is to always define what you will have to do depending on the numbers. And so this is part of your trading plan in order to be prepared in the case everything align correctly for a potential trade. And so we are going to see some volatility now. Okay, the market begin to move. We see some spikes in the euro US dollar, in the pound US dollar, in the euro yen, in the US dollar yen, in the pound Aussie. But we have time, we don't need to react too fast. And so based on the movement, it seems that the number may be a bit better than the forecast. 4.2% against 4.4% for the unemployment rate, so a better number. So this is positive. Now we need to have a better number for the non-farm payroll. And we have a very bad number, so bad surprise. despite the fact that we have a good unemployment rate. So this is somewhat antagonist, but the number is so bad negative so far. So we could see the US dollar weakening. So let's wait a few moments to see if indeed a pair like the pound US dollar will go up, the euro US dollar will go up. Now we can move on this somewhere else. Now we have to wait for 2 minutes for the revision to see if we may have some other reaction in the market. So the typical movement when we have a big surprise, a big deviation, is we have first of all a spike, generally in the direction of the news. It is strange that for the euro US dollar we have a spike to the downside. For the pound US dollar also, but the spike is less important. For the US dollar yen, it is also in the direction of the US dollar. The second step will be a retracement, and then the third step generally will be the fundamental movement, so in the direction of the news. Now, because we have a good unemployment rate and a bad non-farm payroll, we have opposite numbers, and so the market has to interpret what does this mean. And we don't have necessarily all the information to interpret correctly ourselves that situation, and so I prefer to wait how the market will react after the volatility will begin to settle down. And so let's wait and see. So the revision of the previous one has been made, and we can see that the US dollar continues to strengthen. This means also the yen weakening. And we can see that on the pound US dollar, our directional bias indicator begin to reverse to the downside. But on the pound yen, the price moves in the opposite direction. So we have some antagonist movements. This is why it's always better to wait somewhat. And when we have long bars, it's always necessary to wait for some retracement. So this 5-minute bar will close in around 55 seconds. Interestingly enough, we can see on a pair like the euro yen that the price, before going downward and then retracing, it has made tops here on that price levels, this one. And on the pound yen also, the price has made a spike to the downside almost to that max price level by a few pipettes. And on the pound Aussie also, the price has already respected that area where we have two max price levels, and again the price has tested that level before bouncing off and going right to our home base. And from time to time, this is usual when we have such kind of news, the platform somewhat slows down. Sometimes a few seconds, sometimes one minute. This is why we never trade the news by itself. We always wait for the price to move more smoothly with less volatility. Yeah, indeed. Craig's remark is very important. So the USA job losses due to hurricanes had caused many to anticipate a weak number. And so now we begin to see the retracement. And we begin to see in the pound US dollar that the reversal to the downside may perhaps reverse to the upside. In which case this will be general trend reversal, rather in agreement with the news, knowing that we have some antagonist news because we have a good unemployment rate. Let's see here, we have also the uptrend resuming in the euro yen, but we have long bar, so we have to wait anyway for less volatility in the market. And the uptrend continues on the pound yen and on the USD yen, but the price begins to retrace as expected. Oh, Guan, welcome. This is the usual link for the chat, okay? This is the usual link. And you see, for example, in the euro-US dollar, that the retracement is almost equivalent to the first spike. In the euro yen, the retracement has been very, very fast. Now we begin to see an entry setup forming for the pound yen to the upside. But we have to wait for the bar to close, and then we will have to evaluate the validity of the setup bar, because there is of course one small problem. We are very close to the home base. Okay. Let's see on the pound yen. The pound yen is a pair I like to trade, especially. I have traded that pair almost the entire week, Tuesday, Wednesday, and Thursday. So let me draw an horizontal line where I will, but we still have a lot of volatility. Let's wait an additional bar. On the euro-yen, the trend resumes to the upward. We have, with this bar, an entry setup bar, but it is not a valid setup bar, entry setup bar, because it's a too long bar. So we have to wait for a better opportunity. Interestingly enough, the price has broken that price level, so this is a good point to consider long trades here. And on the pound Aussie, the price is also reversing to the upside for the USD, which is strange. Now, a possibility due to the hurricanes, bad numbers, perhaps the market is considering that the number is not so bad, considering the events and the weather events, and in association with the unemployment rate having improved by 0.2%. So this must be taken in consideration, and this is why I'm not surprised to have seen positive sentiment for the US dollar in my preparation routine before the beginning of this session. Yeah, and the average hourly earning is very positive also. So globally, the US dollar seems to be considered as positive indeed. Now, Dan, you may have indeed, between different platforms, when we have such a high volatility, some differences in the data. But when the volatility will slow down, the data will be very, very similar. Okay? It seems that the price begin to reduce the volatility. In all the pairs I have on my screen, the price is moving slower, so the volatility is progressively slowing down. We have long bars, and when we have long bars, we never have good entry setup. The pound yen presents better. We have clearly the volatility having being smaller. And we may have here an entry setup if this bar in 3.5 minutes closes as a blue bar, but then the entry will depend on the distance to the home base here. And we have also something which may be interesting in the pound Aussie. Where is my next level on the pound yen? Oh, it's well far away. So one and a half minutes, and we'll probably have a re-entry setup here in the euro yen. In the pound yen too. The price is accelerating to give a longish bar. The pound yen seems interesting, so the entry will be let's wait a few seconds, and here I will set my stop loss here at 6.62 there, and the entry just above the home base. Here, giving a stop loss size of approximately 20 pips with the spread 23 pips. So here, so this is my entry. The price has crossed my entry level and my stop loss was there. When we use the MTM, so a one-click button helps to open the trade and to adjust the stop loss. So the stop loss has a size of 23, 24 pips. We have a nicely upward bias. Everything is in agreement. This was our re-entry setup. The trade is a bit risky because we don't have the two important news in agreement, but we know that we have trade risk management, which is good enough to limit the risk in the case this trade will go wrong. Which may always happen, of course. No, Fabio, I cannot enter live trades. I'm not authorized to do that. I can show what I would do, but I cannot make live trades. We have strict regulation rules here in Europe. If I make a live trade, this would be considered as a trade advice. And for that, here in Europe, in the Eurozone at least, it's necessary to have an agreement, which is not easy to have. This is why simply by marking the chart, I explain how the rule, the max rules apply. Okay. No, it's not only for Belgium, Fabio. It's for the entire Eurozone. All the countries of the Eurozone have the same regulation rules, except 2 or 3 fiscal offshore, like Guernsey, like Monaco, like there was another one, Gibraltar, I think. Guan, when we trade with the max ETF, it doesn't matter if the price is outside the Bollinger Bands or not. Okay. Fabio, you can open an account where you want, generally speaking. You may live in any country in the Eurozone, for example, and you can open an account with any broker in the Eurozone. This is not a problem. You may also open an account in USA. But sometimes there are some agreement. Some foreign in one country cannot open accounts. For example, US residents cannot open an account in Europe in general, in some countries, and vice versa. Some people living in some foreign countries cannot open an account in USA or in Canada. And so you have, whenever you open an account with a broker which is not in your country, you have to check the rules with that broker, because there are always agreements between, there are often agreements between countries. And it seems that the pound US dollar and the euro US dollar will reverse, most probably. Which will give us another opportunity. No, Fabio, I no longer reside in Belgium. I have relocated in France. Since 1992, I was sharing my life half in France, half in Belgium. And so I have decided now to stay definitively in France. I love France. I will consider that broker. Okay. It's always interesting to know when a broker is considered as a good broker. Sometimes we have to diversify. But Adrian, pay attention to the tax aspect. It's not because the country where the broker is located is tax-free, that when you trade and you make profit, you are not taxed in the country of the broker. But here in France, or in Belgium, when I was in Belgium, I had to pay taxes on my profits. No, I have no problem. I have no problem between France and England, Fabio. You will have problem if you try to avoid taxes on your profits. But if you pay your taxes, there is no problem. Let's have a closer look to the pound US dollar here. Okay, no, it's not yet. It has not yet reversed, so we have to wait here. And for the euro US dollar, it may reverse. It may reverse. Yeah, indeed, Rodolfo. I have waited for the price to close the home base. Not necessarily the home base channel, but the home base. Okay? And you can see here. So this was my setup bar. The entry was very close here to the home base, but just below the home base, and so I have considered an entry just above the home base. Yeah, indeed, Guan, this is the one of the oldest profession, tax people, tax collectors. Yeah, more and more brokers propose a debit card connected to the trading account. Laetitia, the red and green dot above or below some candles are specific indicators we use when we have to consider some possible scaling. And we teach that, we explain that in the Max Standard course. We should see soon a setup coming in the euro yen and in the euro US dollar, but the euro US dollar now will face the home base, so the euro yen is better placed, but we need to wait for a pullback here. And we may see the reversal also in the pound US dollar finally. And so finally the market seems to decide that the news on the non-farm payroll and so was not good enough. And so we see the US dollar weakening on the pound US dollar, on the euro US dollar, on the USD yen now. Something should present also in the pound Aussie. Let's check on the USDN if we may have a potential reversal to the downside. No, we cannot here anticipate a reversal. There is a mic which is open. Can you mute that mic, please? I have a bad echo in my headset. The uptrend in the pound yen seems to strengthen, so we need patience, in fact. The price has to break a very important resistance level here, which is this home base. And now we may have the setup for the, not yet, sorry, not yet. We have to, no, we don't have the trend reversal here, not yet. And on the Euro US dollar, too early, too early. Yeah, there is a possibility for a reversal here. But again, we are facing the home base. So let's wait, and perhaps the pullback I'm expecting here in the Euro Yen for a potential resumption to the upside with either a remo or re-entry. The bar will close in 2 minutes 20 approximately, and if this candle closes as a red bar, we will have most probably here an exit setup bar, a partial exit setup bar. But we have time, and in 2 minutes many things may happen. In terms of exit rules, we have several types of exit rules. We have exit rule based on some indicators. We have exit rule based on price action. We have exit rule based on timing. We have exit rule based on momentum and volatility. And we have an exit rule based on the movement invalidation. And so we explain, of course, all these concepts in details in our course. But the aim of our exit rules is never to predict what the price can do. For example, here it's not because the RSI, this indicator, this oscillator is the stochastic of the RSI, we call it RSI. It's not because it's making a top, for example, that the price will go downward. This is not how we use our exit rules. Our exit rules are simply a way to quantify when the risk we have on the trade or on the position we have becomes serious enough to consider to reduce that risk. So an exit rule is always used to quantify when the risk becomes important enough to take an action, to force us to take an action to reduce that risk. And to reduce that risk, we, under the appropriate condition, of course, we close at least partially our trade. This is why whenever we open a trade, the trade, for example, here we had the setup bar, initial setup bar was this one. So here we had Remo. Our entry setup have a name. So here ETF Remo. And whenever we open a trade, the trade has a specific size, which depend on the stop loss size and which depend on the risk we allocate to the trade. For example, 1%, 2% of the trading account. It's up to each trader to decide the risk the trader feels comfortable with. And so we always consider the trade is made of 2 units. So 1 unit is always half size of the trade. And when we have to reduce the risk, we close 1 unit. By closing 1 unit, either we close 1 unit with a profit or with a loss. It depends when the exit setup bar appears. So let's come back just a moment on the pound US dollar. We don't have the reversal yet, and on the euro US dollar, the price is pulling back. That's a good point. And on the euro yen, the trend is still upward and the price is pulling back, which is a good point because this can give, when the price, if the price resumes, this will give us an entry setup. I will widen the pound yen pair because I want to keep an eye on the euro yen here. And so if this candle stays a red candle, and if it closes as a red candle, we will have one of our exit rule triggering. Oh, this could be a trend reversal, in fact, in the euro yen. Ah, interesting. Interesting. Now, chances are high that this candle will be an exit setup bar. We always indicate that an exit setup bar with a magenta vertical line, but we have to wait for the bar to close before deciding where the exit price level will be. Okay, and I will place my exit price level here. So if the price comes here, I will consider to close 1 unit of this trade. With a small loss, by the way, on that unit. And so this happens. Okay, here, for example, when we see that the price crosses our exit price level, with our tool we call the Max Trade Manager, we close 1 unit. If the price stays below that level, here the price came back. So, okay, now we have to push on the button to close the trade. So here, we may have a small slippage, of course. So here we consider 1 unit has been closed. This is called what we call an MX. MX means a momentum exit or a minor exit. And when the price goes against us and we have an exit rule triggering and we have to close 1 unit, of course this unit is closed with a loss, a small loss, but this helps to reduce the loss of the entire trade in the case we have a losing trade. We don't have, of course, 100% winning trade. This never exists. But the advantage of the max is when we have a losing trade, the loss is always a small one. Always. For example, here, on that, so we close 1 unit here. Let me write here 1 unit. We keep 1 open unit. And so that unit makes a small loss of, here we have 6 pips plus the spread, 3.5 pips approximately. So this unit loses 9.5 pips minus 9.5 pips, which compared to the, let me write it here, when we compare it with the size of the stop loss, and this count only for the half of the size, is really a small loss, which can be easily recovered if the price resumes and move upward. This is why with the max we always try to keep a loss as small as possible. We have no limit for a profit, but the losses are limited. And so you see the difficulty of trades when we have the 2 numbers, mainly the 2 numbers, the non-farm payroll itself and the unemployment rate, not in agreement. So the market does not make a decisive movement. Now when you have still to divide by 2, that unit counts for minus 0.2 R. You have forgotten to divide the number by 2. Okay? Yeah, we may have a long setup for the euro yen and possibly a short setup for the pound US dollar. Let's consider the euro yen here. So 3 seconds. So my entry will be here and my stop loss will be with a stop loss size of approximately here. This is not enough. I need to widen it. Let's widen it a little bit. Here, and so a stop loss size of 12 and 315 pips. price need to reach that level for the trade to be considered as opened. Not yet. No, it's not necessarily a problem, Roland. It's not necessarily a problem. We don't need to have a majority of our tumblers in agreement with the setup. You know that when you use the max standard in particular, there is one indicator, two indicators we never trade against. One of them is this one, and there is another one, you know. All the other with the max standard needs to be in majority in agreement, but with the max ETF we don't need to have that majority in agreement. However, we may have sometimes counter indications, and so this is a good illustration. This is why I'm waiting here. This situation in the store RSI is indeed indicative of an exit setup situation, okay? With that red candle here. When we observe what we have in the price, we have another exit rule also which has triggered on this bar or on this bar. So we are facing, in fact, a situation when we have an entry setup with two exit setup having triggered. One is enough, of course. And so this is a counter indication for the entry. And so when we have the entry opposed to an exit setup, this is a counter indication. And so we have to wait for another opportunity. That other opportunity now is coming with this candle, but we have to wait for this candle to close in a few seconds, and then we can re-evaluate our trade. I have still to keep an eye here, okay, no problem. The candle will close in 40 minutes. We have another entry setup, and now the counter indications are disappearing. It depends how this candle will close. Okay? Now we cannot have a divergence, Rodolfo. It's impossible. Look the chart carefully. And so my stop loss will be a little larger. Okay, the entry now, I must reevaluate the entry. You see the exit setup have disappeared, and so my entry will be here on this level, giving me a stop loss size a little larger, so 14 and 17 pips here. Okay, the price has touched my level, or is touching my level, not exactly. Yeah, it is right when we can see that here at the bottom of the screen. So with the MTM, we can open the trade here, which will be, in fact, this is our setup bar, this candle here, and it is a Remo. Everything is in agreement, so we have an ETF Remo here. Yeah, an ETF Remo. I can take out that horizontal line. Let's observe what the pound yen is doing. And so I can widen the two charts because now my rule is I never open more than two trades simultaneously unless they are, of course, risk-free. Yeah, indeed, Gwen, we have to pay attention because we may have possibly another exit rule triggering. That's true. So we are still in the pound yen. We are far enough from the stop loss with one open unit. So here with the ETF Remo on the euro yen, we consider we have two open units, so 2 units. Daniel, yes, the trade is a bit risky because we are somewhat at extremes of bars, but remember we have had, even if it is mixed numbers on the non-farm payroll, the number were not good, okay? And so with the US dollar weakening, having weakened at least, this always favor the euro in this case. I have no problem in such a case to open a trade which is a little more risky than usual. Under the absence of news, of course, I would have preferred to wait for a deeper pullback, at least to clean some of these longish bars. But when we have some momentum because of some news, I don't hesitate to take a little riskier trade. And a way to handle that is to take a smaller risk per trade. So, for example, if you are used to take a 2% per trade, 2% risk per trade, you can take a 1%. If you are used to take a 1% risk per trade, you can take 0.5% or less. Okay, this red bar unfortunately is an exit setup bar. Okay. It is an exit setup bar. This happens sometime immediately after the trade has been opened. I have to change its color, but the price does not follow through to what should be my level. So my level would be somewhere here, and so the price does not trigger my exit level. And so no exit here. But of course, we have to wait for the price to close to be sure. And so let me draw the level where I should consider to close 1 unit, it will be on this level here. The uptrends are strengthening in both pairs, the euro yen and the pound yen. That's a good point. Another way to consider the momentum of such a movement, Daniel, is this one. So you see here our directional bias indicator has shown an attempt to reverse the trend to the downside here. This was due to this deeper pullback, okay? But this downtrend has been short-lived, and so the price has resumed, in fact, the previous uptrend. The price was previously in an uptrend. So this indicates strength in the momentum. Okay, and so when you have strength in the momentum, you can take a little more risk for your trade. So here we have nothing special, so I can move that line. I always like to keep an horizontal line to define my level of intervention. No, then the short bias does not show a divergence. No. Let me show you that, because you don't seem to be convinced. We have indeed lower highs here, okay? But look what we have. We don't have a divergence, okay? Should this spike not exist, then the divergence would have been there. Or sometimes when we trade in a small time frame, like the 5-minute time frame, it's easy to make such kind of error, because sometimes we need to react very fast. And so we don't necessarily have the time to check everything, every details, and so it's easy to consider we have some divergence when in reality we don't have. We have also a long setup in the USD yen here. A very strong one here. But unfortunately, I have two trades, so I cannot take that one. Otherwise, I will exceed my acceptable risk. You have, of course, to consider not only the risk per trade, but also if you take several trades, the global risk you have. For example, if you take a 2% risk per trade, you can decide that your maximum risk should be, let's say, 4% or 6%, 2 times or 3 times the risk per trade. And so this allows you to open maximum 3 trades. Possibly more if you are able to handle more trades when one of the trade or both the 2 initial trades becomes risk-free. Let's suppose, for example, the euro-yen becomes risk-free. And so because one trade is risk-free, you have only a risk on the remaining open trade. And so then you can consider opening a third trade, provided you are able to handle 3 trades. Now, in a 5-minute time frame, 2 trades is okay. 3 trades, if you have practice, is still okay. More than 3 trades becomes extremely difficult because you need to have a lot of concentration. So here we had not that exit, so this one no longer makes sense. There is no strength in these movements. This always happens when the 2 news are not in agreement. So the non-farm and the unemployment rate. We have sustainable movement when we have a big surprise in both numbers. Indeed, I consider that 6% when you handle several trades simultaneously, 6% should be maximum. If I remember, Gwen, you have taken the max advance course. Am I right? If I remember correctly, you have taken the max advanced course, no? Have you? Yes, indeed. And so if you remember, 6% is a special number. No. This is something different. When you apply the scaling process, then at the beginning of a trend, when you make 1 or 2 scalings, you may have temporarily your risk increasing. And so you have also to consider, in order to possibly limit the number of scaling, to consider what is your maximum temporary risk on the trade. Okay? But then you have the global risk for all your simultaneous trade. And 6% is a special number. Why? Because in the case of a drawdown, you know that when the drawdown increases, the profit to recover that drawdown increases exponentially. And so 6% is an appropriate limit to limit the increase of the profits. So to limit the exponential part of the profit to recover. And because of the max the way we handle the trade, we know that when we have a losing trade has a size of approximately, on average, minus 0.5 R. Okay, minus 0.5 R. This means that if you take a risk of 2%, for example, a half R is minus 1%. And if your two trades are losing trade, you lose on average 2%. You still have two shots to try. So here we may have the movement invalidation. The IZ line doesn't appear yet, but we know that we have the IZ line here, like this one. It should appear very soon, but we know that the movement invalidation area is all that area here. And we can say in advance, if we are forced to scratch the trade in this area, so the second unit, we will lose maximum around 12 pips to the trade, 15 pips. 15 and 9.5 will be 24.5, and 24 we have to divide by 2 to average the result of the two units. It's exactly half of the size of the stop loss, so minus 0.5 R. Well, the movements are not convincing, so there is no conviction in the market today, and I'm seeing on my other screens more pairs. We have no movement at all. Yeah, as a reason to the downside or as a support to the upside. Classical max trade on the USDN, no. No, Daniel. We had in this area a re-entry. Okay, in this area we had a re-entry. But because of that long bar, with the max standard, we would not have considered it because the entry would have been around the extreme of this long bar. With the max ETF, it's not a problem because with the max ETF, we have, in fact, a better appreciation of the momentum we have in the movement. Now, let's pay attention here because we will have most probably here an exit setup bar if this candle closes as a red bar. Yep, it will be the case. And so the exit should be made here if the price drops at 515. 515 will be here. Now, because we have not a lot of momentum and not a lot of volatility, we can choose a smaller distance, but I will keep the same, that distance, the usual distance. You see the IZ line begin to appear here. You see the kind of movement we have when we don't have the two numbers in agreement, positive or negative. So they are more challenging movement. And in such a case, it's very often better to not take these trades, to skip the trade, to stay aside, and to consider only when the two numbers are in agreement. Where is the next higher resistance level on the euro-yen? Oh, far enough. Almost at 134 here. Okay. 133, spot 986. Yeah, we have a divergent industrial RSI, Guam. Indeed. This is why this candle is an exit setup bar. Okay, here we are approaching the moment we will have to scratch the trade. Okay, we have to scratch the trade here. See. And so this is a losing trade. So here we have closed the second unit with what we call an XXX. We close the second unit, so, and this unit loses less than the size of the stop loss. So here we have 12 pips plus the spread 3.8, so 16 pips. So we have here 16 pips minus 16. And so the two units together loses, we can write on the chart here minus, how much? Minus 25.5, which represent a reward to risk ratio. How much? A -1, of course. Just a little above 5.5 R. So if I take my desktop calculator, 16.5, 25.5 divided by 2 and divided by 24, 5.3. So a small loss, which is easily recovered with a winning trade. And here we are flirting with an MX. Yeah, indeed, Susan. We are at the proximity of a TT line here. Okay, and so depending what is your distance to the TT line, you can decide if that distance is a small one to make your exit, to consider your exit just below the TT line. I don't show the TT line here, but I see on my screen that we have indeed TT lines. But we are far enough, so we are at approximately 4 pips on my screen. I will not push my exit level 4 pips further. So here by 1 pipette, 3 pipettes the price has not touched my level. So the open and the low here is 3 pipettes above my exit level. So no exit here. And so the 2 units are still alive here. What are the other pair doing? Let's have a quick look here. The pound US dollar is still in a downtrend. So the US dollar is strengthening. That's really strange. But that's the market. That's the market. Let me write a number on the screen for those of you who are not used with the max here. With the max we have, with the max ETF, we have a winning rate of approximately 65%, a little less than the max standard. So this is the winning rate. The losing rate is not 35. The losing rate is approximately 25. Okay, so let's write here 25. 25%. Now, the average, and let's write it in negative just to remember that it is the losing rate. So, similarly to this losing trade here, when we have a losing trade in the 25% of the case, the size of the loss is around half R, minus half R. So we have minus 0.5 R. R being the risk, 0.5%, 1%, 2%, so depending on the trader. And when we have a winning trade, the profit is unlimited. But very often the profit is equal or larger to plus 3 R's. Okay? 3 R's. And so when you calculate the expectancy with these numbers, you have a positive expectancy. Okay? But what you have to consider, and this is why the risk you take per trade is very important to feel comfortable to go through the drawdown, because the drawdown are a necessity when we have losing trades. So when we have a 65% winning trade, we may face losing streaks going from something like 4 to 10 losing trade in a row. So we can have losing streaks made of 4 to 10 losing trades in a row. Okay? And so you see that choosing a small risk per trade is a way to go through such kind of drawdown without hurting your trading account. If you take, for example, a 1% risk per trade and you have 10 losing trades in a row, without uncompounding, you will lose 5%. So 10 times half R, with the R being 1%, this will represent 5% drawdown. 5% drawdown can be easily recovered with 2 winning trade. Okay? So this is why you have always to take these kind of numbers. So knowing the winning rate is not enough, knowing the losing rate is not enough, you need to know also what is the average profit of a winning trade, the average loss of a losing trade, and you need to know, to better fix your risk per trade, you need to know what are the drawdown or what are the losing streaks you can face based on your winning rate. Okay? Yes, Rodolfo, but it is a little too early to give a conclusion. But indeed, with the bias indicator, these numbers will be improved. But we don't have enough trade to tell by how much these numbers have been improved. But I will not be surprised based on my trade that will be around 80%. 80%. We may have another entry set up here on the pound yen, but also on the US dollar yen, not so good, not so good. Let's have a quick look to the euro US dollar, but the euro US dollar makes nothing special. See, nothing special here. And one way to improve these numbers, in fact, and especially to reduce the length of the losing streaks, is to be extremely picky in your trade. And so, based on what I have explained, for example, in the case of the non-farm payroll, when we don't have the two numbers in agreement, most of the time it's better to skip the trade, because it will be a 50-50% situation. In half of the case you will have winning trade, in half of the case you will have losing trades, and a lot of stress possibly. And so better to avoid that stress. There are so many other opportunities. Now the price here has moved by 11 pips, 12 pips approximately. So when the price moves in favor of the trade, we have rules also to adjust our stop loss. So that exit rule has no trigger, so let me erase that vertical line. Let's move that horizontal line. So we have rules to adjust our stop loss in order to progressively reduce the risk on the trade. It's not a trading stop, but the rules, when we apply, it looks like a trading stop. Let me show you here how I would adjust my stop loss. And we can make as many adjustments as we want while the price is moving in favor of the trade. And now this is an interesting situation because we can see that the stop loss is in the middle here. All that area here between what we call our more line and that dotted magenta line is called the movement invalidation area. And that area is the worst case scenario to close the trade. So rather far away from our stop loss. And you can see that the adjustment, my last adjustment here, set the stop loss in the middle of that area. And so this means that in the worst case scenario, should the trade be close to that level, I would lose around 8, let's say 9 plus the spread, 12 pips. So 2/3 of the initial risk. This is the maximum loss I can make now on this trade. The loss, if the trade is a losing one, will be smaller because in the meantime I will have the opportunity to close one unit. We always use 2 steps, and 99.9% of the case we close a trade in 2 steps. And so this is why we are able, in the case of losing trade, to keep the loss very small. Now, at this time of the day, if we have new setups arising, and especially at the end of the week, it's not wise to open new trades. Otherwise, there is short setup appearing on the pound US dollar, but the trade now will become more and more risky. We are approaching the time period when the trade will become risky and when the big boys will close some of their position totally or partially. And if this candle closes as a red candle, this will be a valid, yes, it will be a valid exit setup bar. And what kind of divergence will we have here, Suzanne? What kind of divergence will we have here? Because we will have another divergence. What kind of divergence? Yeah, correct. You are correct. So 30 seconds before the candle closes. Chances are high for the candle to close as a red candle. So it will be an exit setup bar, not because it is a red candle, but because we have exit setup triggering, we have exit rule triggering. Yeah. And my exit level will be here. Normally we have a more complete template. And with a more complete template, we have more exit rule at our disposal. And with these additional exit rule, we have more accuracy generally on the exit rule. Let me check here with the euro-yen if this is not the case. No, we cannot make a more accurate exit here. 4-2, so we have an MX here on the euro-yen. So MX1. The stubborn divergent, they want to go away. Yeah, but that's the rule of the game, Guan. Okay? We knew in advance the trade were risky. Okay? And so we know that when the trades are risky, it's better to skip them. But if we want to take them, we have to manage them in order to reduce the risk on these trades. So on the euro-yen, so we close 1 unit, of course, and it will be close to the break-even. My entry was there, okay? The exit is there, and we have 2.5 with a spread of almost 3. So we are almost break-even for that unit. So we may have a small slippage, okay? 2 out of 3 times I have a slippage in my favor. 1 out of 3 times I have a slippage against me. When, of course, we take a trade outside the news, so when we have a normal spread, so we have a normal spread. So most of the time the slippages are in my favor, but on the long term they cancel each other, so they are neutral. So here I will consider I have a small slippage against me, and so consider that I have a -1. So virtually break even. The second unit, in the worst case, will lose here. So we have set 9 pips. 9 pips plus the spread, so 12 pips. So 13 pips in total, and 30 pips. Half of that is 6.5. It's less than half R. But we are not there yet. So this is in fact the conclusion of such days. So the non-farm payroll is a complex news release. And let me re-show the calendar just to re-explain. So with the non-farm payroll, we have so here a negative number. Okay. We have also the unemployment rate. But the unemployment rate has been a better number. Not by a big deviation, a small deviation, but anyway a good number. So a bad number and a good number. When we have such contradictory data, so the movements are more challenging to take trades, and so the movements are more risky to trade. The trades are more risky. When we have either 2 bad numbers or 2 good numbers, and with a big difference from the forecast, then we have sustainable movement. And this happens regularly enough, because if you check the historical here of the non-farm payroll, you can see that we have very often big deviation like in this area, like in this area, like here, like here, like in this area. So we have often big deviation in the non-farm payroll itself, and in the unemployment rate, the deviation are less, the big deviation are less frequent. But it is a number in percentages, so we need to have a number, a deviation larger than 0.2, 0.3%, which was the case, but in the opposite direction than the non-farm. And this is why we have more challenging, more riskier trade when we have such contradictory data. You see, we had a setup in the US dollar yen here, 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 but the price does not move. Not move at all. On the pound yen, the price does not move. On the pound US dollar, the price does not move. So the market no longer moves. On the euro US dollar, similarly, the price does not move. The price is in fact ranging. We have a nice concession zone here. And in fact, this is the complexity of the news release. Let me just give you some information about the complexity of the news release. One of the complexity I have already explained is the color code we have in Forex Factory, or any other code you may have in other economical calendar are not always correct. So it's not because you have a news which is red that the news will always give a big impact in the case of a surprise. So a distinction must be made more carefully between what are really important news and what are not important news. And then when you succeed to define what are the news which are really important, you have to classify them into two categories, in fact. There are news which are always important when there is a big surprise, typically the non-farm payroll, or typically any interest rates announcement, especially when the increase or the decrease of the interest rates is different from the forecast. Then we have big movement. And so such kind of news, there are other news, of course, are always important. There are other news, and typical such news are, for example, in USA the CPI or the PMI, for example. In UK, what we have had earlier today, the housing price index, the Halifax housing price index. So there are a series of news which are important only in certain aspects, in certain steps in the economical cycle of the country. You know that the economy of a country is by nature cyclical, going from a crisis, an economical crisis or a recession, to a recovery phase, then an expansion phase, then a bubble phase, then the contraction phase. And then again in a crisis or in a recession phase. And so the second category of news are news which are considered by the big boys and so important to consider only in some of these phases, not along all the economical cycle. And so it's important to know where the economy is located in its cycle for a specific country, in order to know for this category of news if the big boys will focus on them or not. And this is why you have these two specific type of news, which makes the news difficult to analyze and to anticipate. And there is even a third category which are never important, except from time to time, when the big boys have no other important release data to consider. They take one, depending on the circumstances, of course, they take one of the news which are not important at all in the Forex, at least in the Forex, because one news may not be important in the Forex, but it may be important, for example, in the stock market. And they will pay attention to that news for 1 month, 2 months, 3 months, and after that they will forget that news, because other usual news will be important. A typical such news, when the big boys from time to time focus on them, is the ISM manufacturing or non-manufacturing index. But there are also other, of course. And so it's important to know in which category each news is and where the country economy is in its cycle. Because this will help you to better, in fact, understand when a news will be important. And of course, last difficulty is what is the big deviation, and the big deviation is not necessarily the same for each news. In the non-farm payroll, to have a big deviation, we need to see a difference between the release data and the forecast, usually larger than 40K, 50K sometimes, and even sometimes more than 50Ks. In the unemployment rate, we need to have a deviation minimum of 0.2, 0.3% or more, of course. And in some other numbers, in some other news, when the number is given as a percentage, it must be more than 1%, for example. And so you have to know these numbers, and this comes from experience. And so keeping statistics on these news is important. And then when you have a big surprise, Another difficulty you have with the news is, for some of the news we have in the calendar, the big boys are able to forecast what the release will be, and to have forecast better than the forecast published in the economical calendar, like Forex Factory, FX Street, even Bloomberg, Reuters, and so on. There are a lot of economical calendars. So they have better forecasts, and so for some of the news, not for all of them, but for some of the news. And so they can see in advance what the news will be. And so they anticipate what the news will be, and they take position before the news release. And so the impact of the news, once the news is released, depends also on how much the price has moved in the direction of the news. And so this is why the trading around the news, I don't say trading the news, because trying to catch these important spikes at the moment the news is released is extremely difficult, and as retail traders we are not well armed for that. We have systematically bad price execution, but after the news it is a difficult process because of all the difficulties I have just explained. You see on the USD-yen also the trade would have failed, in fact. Let me widen just a moment to have a better look to our companion indicator, which is our buyer's directional indicator. No, we cannot anticipate a trend reversal here. Not yet. So let's see for around 10 minutes how this movement will evolve, and after that we will wrap up here this session. Now, in the pound US dollar, for the max traders who have taken the max ETF course, now we can see that we have a possibility for a trend reversal here. Look what is happening here, okay? And so this candle maybe possibly, if it closes as a blue bar, the setup bar for a long trade with a trend reversal. The only problem we have is we are approaching the end of the day and the end of the week. Generally, on a Friday, the second half of the US session, this is the US close. The second part of the US session will be or is a quiet period. And so do not expect a big movement to the upside. But here we clearly see at the close of this candle, if it closes as a blue bar, that we will have here all the elements telling us that we will have a trend reversal. We can see that by the relationship we have between the long-term buyers on one side and on the other side, the behavior between, or the comparison between the short-term buyers and the price itself. We have all the ingredients here. If this candle closes as a blue bar and we have this small up white arrow printing, this may be the trend reversal. Okay? this doesn't mean this will be a tradable setup bar. And we will have the same thing with the pound US dollar. Sorry, it was the pound US dollar. It was the pound US dollar. I don't have a level down on the pound US dollar. I don't have a level here. We are far away from the levels. So in less than 2 minutes, we will know if this will be. And by the way, if this is the case, it will be a setup. It will be a BTMO, in fact. You can see a BTMO. And this also could be good for the trade here. Wow. Finally. And when you have that, of course, you have to tighten further the stop loss in such a way to reduce the risk further to only 5 pips plus the spread, 8 pips. And then this candle will be itself an exit setup bar. But it retraces very quickly from its high. (16 seconds). Okay. The price moves further. I can tighten a little more my stop loss. That way. Exit. So here we have our exit for the XXX. This is what we call a long bar, and a long bar is always an opportunity to bank some profit. So we close the second unit here. So we close 1 unit. And that unit has made 13 pips minus the so 10 pips, so plus 10. Plus 10. It is a small trade, but we knew the context. And so in this case, we have plus 9, because we have plus 10 here, minus 1 here, so plus 9. Plus 9 representing, so plus 9 pips, which represent just a little more than half R. So 9, no sorry, not 9, half R, but a quarter of, so 9 divided by 2 and by 17, so 1 quarter, so 2.7, 0.0 plus 0.27 R. Yeah, indeed, Dan, it looks like the price is gaining some volatility. Don't forget we are also approaching the European market close. In half an hour approximately we will have the Frankfurt close. and 1 hour later we will have the London close. But there are already some position being closed, in fact. Okay. Grant, this is what I have made. Okay. This is the portion I choose to close the trade, 1/3 of the length of the long bar. In most of the case, we are able to close the trade, okay, when the price retraces half of the, or 1/3. We can choose 1/4, 1/3, or half. But when you recognize the long bar and the price is below your exit level, you cannot make your exit. And sometimes we miss an exit with the long bar when the long bar has itself a long wick and closing below the exit level. With the long bar, you have to develop the courage to stay in the long bar almost until the last second before the candle closes. Okay? Otherwise, you will very often close your long bar. You will close your unit due to the long bar too early. Too early. So this trade is a small winning trade because small movements. And unfortunately, we were forced to scratch 1 unit here. It's not enough to recover the previous one, but at least it recovers half of the previous loss. Okay? So this means that on these 2 trades, the loss is really, really small. Another winning trade will recover the entire loss, which is by itself a very small one. Okay, any questions about what I have explained today and what I have illustrated today? So if you had to remember something is in the case of the non-farm payroll, so when the 2 numbers are not in agreement, so the non-farm payroll itself and the unemployment rate, when one is good and the other is bad, so the market is way, way more difficult to trade. And most of the time it's better to not trade. When the 2 numbers are in agreement, most of the time the market will move accordingly to that number. So for example, if we have a good non-farm payroll, a good unemployment rate, this will strengthen the US dollar. If we have 2 bad numbers, this will weaken the US dollar. And so you can, in the first case, take a short trade on a pair like the pound US dollar or a long trade on a pair like the USD yen. And in the second case, you will be able to take a trade in the opposite direction. So bad numbers on the US dollar, so you will have a long trade on the pound US dollar and a short trade on the US dollar yen. Okay? But of course, a big surprise in agreement in the 2 numbers will occur approximately 1 out of 3 times. And so this means that 2 out of 3 times you have no real good opportunity to take a trade with the non-farm payroll. Okay, no questions before we wrap up this session here? And by the way, you can see that on the pound yen, we have now the trend reversing. And this, after this bar, when we will have the confirmation that the trend is reversing, then you can look for a short setup. But we are approaching the close of the European market. Let's have a quick look to the pound US dollar, because I have explained that the trend was reversing too. And so, unfortunately, this is not a good setup bar. This is a too long bar. And so you will have to wait for another bar, but facing the same problem. I do not expect an important movement on these pairs, the pound US dollar, the pound yen, for the rest of the day. Okay? No questions? Everything is clear? Okay. Yeah, I wish you an excellent weekend for the Max ETF Standard students. So we will see in about indeed 5 hours for the session number 5. And so for the other, I wish you an excellent weekend. Have a good rest and be ready to make nice trades next week. That being said, oh, thank you very much. Thank you very much. So that being said, take care. Bye everyone.